What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and we're going to be going over context logic, aka Wish stock, which has been absolutely killed by earnings last week. As we can see, it's down 20% on the day, but it did have a really nice recovery during the pre-market. It was down negative 28%, and then it kind of recovered a little bit, grew 10% throughout the rest of the day. So there is some really nice support at this $7 price point. As we can see, really nice price point right now. It's at all-time lows, and it is quite a bit down from its all-time highs of just $31 per share. So there's a lot of growth potential definitely with this company, and we're going to be going into some option plays that you should be taking advantage of if you are bullish on Wish stock. So if we take a look at the technical analysis, there's this huge gap that needs to be filled, and we have a huge bullish candle right here because of the recovery that Wish saw right after the huge sell-off. A lot of people saw it as a really good dip buying opportunity. They were very bullish, and we saw a similar setup right here where the stock dipped to low $7, and then people bought a ton of shares at that price point. Right now, we're sitting at really low levels. Nice gap to fill between this $7 between this $8 and $9 price point. So we can see that gap getting filled over the next couple of days. And volatility volume is definitely rising. The RSI is indicating that the stock is definitely oversold. So we're gonna be bullish on this stock, and we're gonna take a look at some options you should be playing in order to capitalize on basically lots of profit. So if we take a look at the options summary, overall it's pretty bearish. A lot more calls, a lot more puts are compared to call options. And implied volatility is still pretty high. Obviously, it was much higher before earnings, and then it did get crushed after earnings, but it wasn't as bad. As we can see, implied volatility is still at very, very high and above average levels, which is going to be pretty good because we're going to be selling options on this stock. As you can see, the premiums for the put option side, it's a lot higher. It's a lot more inflated, which means that if you want to buy puts on the stock, it's going to cost you a lot more. So one way to capitalize on the higher premiums is to sell the option instead and collect that juicy premium. So if we take a look at the options, a cash secured put is going to be a sell put. And if we do something like August 20th, we can see that there is this nice $7 contract that we can sell. And we're going to receive $27 of premium, which is pretty nice. Very, very safe, especially since there's a really strong support at $7 per share. And the break even is at the all-time lows. So if we do end up getting assigned Wish stock, at $7 per share, it's going to be a really nice dip to buy, especially with our new cost basis of $6.73 per share. But overall, I do think that this is a very profitable trade, especially with how much it got killed from earnings, and it does have some promising movement. A lot of people are buying the dip. It was down all the way down to a mid $6 price point, and now it's recovered almost $1 since the all-time lows. But it's still pretty far behind from what it used to be. So this $7 cash secured put seems pretty good. It's perfect for small accounts as well. So we take a look at our calculator here. We're going to calculate what the total return is going to be on this contract. So it's going to be 700 minus $27 of premium. Collateral is going to be $673 that we need to put down. And then the profit is going to be $27 of premium that we're collecting divided by our collateral of $673, which is going to be a 4% return in just 1 week. Very, very profitable, safe strategy that we're seeing here because the premiums are going to be higher than normal. As you can see, implied volatility is at 154%. because a lot of people are just buying put options on the stock, but overall the flow, the movement is a lot of strong support at $7 per share. So we're going to be selling this put option at the $7 strike instead and try to capitalize on the higher premiums. 4% return in 1 week is a very good return for your money, and it's only going to cost you about a little less than $700 of collateral to put down in order to enter this trade. So selling multiple contracts on Wish is going to be proving a very profitable strategy and very safe, a lot safer than just outright buying calls and puts. If implied volatility was very low, was at its historical lows, buying some call options, long-term call options would be a very good strategy. But as we saw, implied volatility is very high, which means the premiums are going to be very high, and we can sell some really nice cash secure puts on the stock and collect some bigger than normal premium. So that's about it for this video. If it helped you in any way, please leave a like, comment down below what your thoughts are on which stock, and of course take a look at the link in the description for our paid Discord server. We have buy and sell option alerts from dozens of analysts. Thanks for watching.